So you're thinking about hiring a financial planner, or maybe you already have a financial planner, or maybe you're thinking that I have no need for a financial planner. I can do everything myself. Regardless of which camp you fit in, I do think that financial planners serve a role. Now, full disclosure, I am a financial planner, so maybe I'm a little bit biased, but as I see it, we have an important duty to our clients and to the public at large to make sure that we're serving the role in which they ask us to serve. As I see it, there are three things that each financial planner should be making sure that he or she is doing. Let's cover each of them. The first thing that I think a good financial planner should be doing is showing transparency and communication with his or her clients. And equally as important, I think the person sitting across from the financial planner should feel confidence in transparency and communication as well. It's a two-way street. And really, for a financial planner to do his or her best job, the person sitting across the desk from them should also be transparent, because that's really what's going to allow for complete honesty to really help get everything out on the table to achieve goals. Let's start with what I think is more of the obvious one, though. A financial planner should not be afraid to show the fee in which he or she will charge to a client. And the good thing about the financial planning industry is that there are a number of different ways in which you can pay a fee. One of the more common ones is you can pay an assets under management fee, where if a financial planner is managing your assets, the financial planner will charge a percentage of the assets that he or she is managing and collect that as a fee. Now, with that model, you could see that the fees that you're paying on a regular basis are going to go up and down with the balance of your portfolio. Other financial planners will charge a flat fee, in which case the fee in which you'd be paying as a client would not change, and the account balance that you have does not dictate how much you pay on a regular basis. Others may charge on an hourly basis, similar to maybe how attorneys charge. And now others may charge via commission. And I think this can often be where the financial planning industry gets a bad rap, and understandably so. You want to make sure that if you're going to be paying a commission, that the person who is pushing that product on you isn't doing so for his or her benefit, but is doing so for your benefit. Ultimately, as a client, if you're working with a financial planner, you're going to be paying some type of fee. You just want to know that it's a fair fee, you're getting value for that fee, and that you're fully aware of how much you are paying and how much your advisor is being compensated. But transparency and communication is a lot more than just the fee conversation. It's also making sure that the financial planner is actually working with you and is aware of your situation. If you pick up the phone to call your advisor and you tell them that you have a question, the advisor should know your situation because he or she should be working with you on a regular basis. Your financial planner should be focusing on your numbers and your situation on a regular basis, but you should also have communication from your advisor what's going on in the outside world. Washington, D.C. often makes changes, whether it be to tax law. You may also notice changes at the Federal Reserve level, and the stock market fluctuates on a daily basis. So understanding how each of these things are working in conjunction with your plan is one of the duties that a financial planner should have. If you pick up the phone and your financial planner isn't giving you full confidence that he or she knows your situation in and out, then you should consider at least finding another financial planner. Lastly, they should be conducting reviews with you regularly. Now, for some advisors, they want to meet with their clients quarterly. Others may only want to meet once a year. There could be somewhere in between. Ultimately, you need to make sure that you're meeting with your advisor enough that you can give them awareness of what's happening in your life, because a good advisor should be asking more questions about you and what's happening in your world. Because as your goals continue to change, that may change the advice that the financial planner is giving you. Yes, there will be changes in the stock market, to interest rate policy, and to tax policy. These types of things are common. But what's important to make sure is that those things are going to happen regardless. We know that that change is constant. A good financial planning relationship is one in which the advisor is explaining what some of these things are to the client, if he or she is not aware, but where the client is filling in the advisor on the many different things that are changing within their lives. That way, an advisor can take this information and, again, help them achieve their goals in the best way possible. The second thing that you should be getting from your financial advisor is value. And yes, that should seem obvious, but there are a couple different ways in which I think value can be given and value can be received. If you're going to be paying your advisor a fee, you want to make sure that you're getting some level of value equal to or greater than what you're giving up. Therefore, you want to make sure that your advisor is providing both quantitative and qualitative value. And if you're not familiar with what those terms are, quantitative value really does have to deal with the numbers. You should be working with an advisor who is making sure that you're properly invested. and that your returns are justified by the fee that you're paying. You should also be working with an advisor who's able to help you make decisions about your income. One of the main reasons that a person would hire a financial planner is that he or she can live off of income for the rest of their lives without having to work. If a financial planner cannot do that properly, then you're probably working with the wrong kind of planner. An advisor should also be helping you with tax planning. Many advisors, oftentimes, when they're asked a tax question, may say, well, I'm not a CPA, I'm not a tax preparer. And yes, while that's true, you want to make sure that your tax preparer, your CPA, is on the same page with your financial planner. A financial planner shouldn't be backing away from questions that have to do with taxes. Instead, you should be working with a planner who can give you confidence that the moves that you're making are saving you taxes in both the current year, but also over the long term. Taxes can be the highest expense for many families, and the more money that you make or the more money you have, that accentuates it even more. Chances are good that if you're saving money or you have been saving money, the way in which taxes are going to impact your plan can be significant. So working with a planner who understands them and is focusing on them and is working with your CPA or your tax preparer can really give you a leg up to make sure that you're working with somebody, again, who's vested in your best interest. Lastly, they should also be aware of what your estate planning and your wealth transfer look like. If you have children and you want to leave them your hard-earned savings, then you want to make sure that you can do so in the most efficient way possible. Whether that's saving dollars via probate, whether that's saving dollars via inheritance tax or estate tax, or if it's just making sure that you're leaving dollars to your kids that match what your wishes are. Sometimes our children are not ready to receive the dollars just yet. Maybe they're not mature enough. Maybe they're dealing with the situation. To make sure that your financial planner is aware and on the same page with perhaps an estate attorney can also be very important. And I know this is where a lot of people sometimes think, well, I don't need a financial planner for that. And you may be right. You may not need a financial planner for this information. Maybe you do, though. And if you do, they can also provide qualitative value as well. Qualitative value isn't quite as easy to put a dollar sign next to. That qualitative value really covers more of a person's feelings about something. I oftentimes think about legal documents that are had. There is certainly a cost to having a power of attorney. And while that cost may be a couple $100s, that feeling that you could have of knowing that if something were to happen to you, that somebody else can make the decision on your behalf can really create peace of mind for that individual, perhaps your spouse who's taking over. When I think of qualitative value, it's defined as peace of mind. It's defined as having an advocate through your relationships. It's defined as freeing up your time. And a lot of these things are very hard to attach a dollar amount to. How much is your time worth with your grandkids? How much is your time worth to allow you to do the things that you want to do without having to focus regularly on your finances? How much is peace of mind worth to you? And yes, some advisors may overcharge or charge quite a premium for it. But if you're willing to pay that fee and you're able to get these things in return, it may be worth hiring a financial planner. But one of the other things that a financial planner should be able to provide to you is the ability to not make big mistakes. One thing that I think a lot of people run themselves into is they get emotional with their investment accounts. If you have a significant amount of dollars and the stock market does crash, you can notice a sizable amount of wealth wiped out overnight. That's not a fun feeling. A financial planner should be able to take some of that emotion out of it and yet still be able to talk to you as if you're a real person, not just a 401k statement. And that's what I think number 3 is. Something that is most important that a financial planner should be willing to do is to engage in a relationship with the people that he or she is working with. You shouldn't be walking into a financial planner's office thinking, he or she may not be giving me the type of attention I need or deserve because I don't quite have enough money for this person. If that is the case where an advisor has a minimum threshold that he or she is working with, that's certainly understandable. But there are many advisors out there who don't have a minimum threshold. There are many advisors out there who can be willing advocates for somebody that doesn't have a minimum amount of assets or that maybe doesn't have the wealth that would be required to work with that planner. Regardless, you should have somebody who cares about you beyond what your number is. I'm reminded of this when my wife and I had a situation with our pregnancies where we would go into doctors' offices and the doctors wouldn't even know our name half the time, wouldn't know the story that we had. And therefore, when they're giving advice, they're asking questions that we're thinking, you should know this information. This shouldn't be the first time that you hear it. It's no different if you're working with a financial planner. He or she should not be asking you the same questions or be unfamiliar with your situation. You should be able to call your financial planner up and they should know what's going on in your life. It's important to make sure that the relationship with your financial planner is no different than it would be with a friend or a colleague. The difference would be that they're willing to hold you accountable and they're willing to have sometimes the hard conversations or make you aware of what's going on in your financial situation, but you should celebrate your wins with your planner. Unfortunately, you should be able to talk through some of the losses with your planner and they should handle your situation with care. If you walk into your financial planner's office and all they give you each time is a percentage chance that you can retire with X amount of dollars, I don't necessarily think that's the best way to be working with somebody. Now, you may find that that's right for you, and that's fine. But if you're looking for somebody who cares for you beyond your numbers, you should be working with a financial planner who helps you achieve your goals in both the good times and the bad. The last thing that I'll state is I think your planner should be somebody who is providing education to you. You should be getting more out than you're putting into a planning relationship. I hope you subscribe to the channel because we cover a lot of financial planning topics for retirees and pre-retirees. You can also check out our website, in which we also have a link that you can sign up for our free weekly newsletter. If you're so inclined to see how we operate with our clients, I'm also putting a link in the description to show how you can end up setting yourself some time to get a free assessment and seeing how we can help clients. You should also check out some more of our educational content, including information about Social Security and how you can best minimize taxes on your retirement income.